Bien, muy buenos días.
Good
Bienvenidos
morning.
a todos y a todas a la
Welcome,
presentación del
everyone,
monitor
to this presentation of the 2024 report launch, Trade and Integration Monitor. Thank you very much for joining us for today's presentation. This year, the monitor is entitled Challenging the Trend, the Potential of Knowledge-Based Services. And in a way, what we'll see today is that international trade has been characterized because it has stabilized in a trend that replicates the trend that was followed by global trade in levels pre-pandemic with a moderate growth level. And in a way, the purpose of the monitor is to see how in the region we can challenge that trend and try to push greater global trade on the basis of regional trade. And in that regard, what we see is that the knowledge-based service sector is one that not only has proven to be more resilient to crisis, but it is one that is showing greater dynamism in our region, and it still has a relatively low participation or share in the global trade of knowledge-based services, and therefore we see that there is a huge opportunity for our region. Therefore, this is the main focus of the 2024 monitor. And what we're going to do in today's presentation is to have one first introduction to the monitor through a presentation that will be made by my colleague Paulo, who's with us today. He has been leading and coordinating the development of this monitor for several years now. And after the presentation, we will have a Q&A session. We will have an open mic with three of the co-authors of the study who are also with us today, Katia Misashevsky, Romina Gaya, and Rosario Campos. The presentation today has simultaneous interpretation into English and Spanish. You can select the language of your choice, either English or Spanish, and at the same time, we will have an open dialogue where you can include your queries, your comments, or whatever questions you might have. Just place them on the chat in this Zoom, and we will gladly take your questions and comments and discuss them when we come to the Q&A after the presentation. So without further ado, let me give the floor to Paolo for the initial presentation, and I thank you very much for joining us today in this presentation. Thank you, Pablo. Good morning, everyone. As has already been stated by Pablo, the main focus of the 2024 monitor is on the one hand to take a look at the trend, and on the other one to see what can be done by the region in order to come out of that trend, which, as we said previously, and this is what led to the title, a relatively challenging trend. So let us delve into looking some of the trends that were manifest between mid last year and mid this year, which is the main focus of our work. And after the pandemic, after the crisis with the pandemic and the recovery phase, which was interrupted as of the Russian invasion in Ukraine in the middle of 2022, then by mid-2023, we moved into a stabilization phase. And as Pablo said, with relatively low growth in global trade, we still see a moderate contraction, is very much aligned with the pre-pandemic trend. What has changed, in fact, is that last year, the developed countries had stopped that growth in trade, and this year, developed countries returned and faced the main requesters and demanders for international trade, and as we see, or we will see later on, some changes. So what is the trend due to greatest economic growth that comes hand in hand with the moderation of inflation and the beginning of the expansionary movement in the inflationary economy, but some structural processes in trade that has to do with geopolitical and industrial trends and policies, protectionist measures of a different kind, which in a way are halting or stopping trade. If we take a look and if we break down this trend in prices and volumes, so we see that the prices dropped less after the growth of prices in 2022 and 2023. They started dropping, but then at the beginning of 2024, we saw some stabilization, or at least we saw a reduction in the rhythm of the way they were dropping, and the levels started growing again. Latin America and you can see this on the right-hand side of the values grew more than global trade because and the volumes increased more. And that, in fact, is very atypical, in spite of the fact that with this information, we see an impact of a comparison basis, which is in a way favorable because the previous year, the region had been characterized by a huge drought. At least some countries in the region had faced a huge drought, which in statistical terms pushed the exports up. But it continues to be a performance that is seen in the global scenario. And these are the averages. If we take a look at what do we find behind these averages, and we take a look at the prices, we see that the dynamics of prices, if we take a look at it from a trend point of view, they're favorable, but some unequal. The price of coffee, for example, is a price that has triggered last year. It is important from Brazil, some Andean countries, and several Central American countries. However, later on in the report, which we will not show here, but in the report we have a discussion on how that has helped some countries in the region or not. And that price movement, in a way, has a differentiated impact in the different countries in the region, depending on their trade specialization and the position of net exporter or net importer of the different commodities. And we were taking a look at these when trying to get the prices. For example, energy prices have been dropping significantly, and this obviously penalizes major exporters of energy products, as is the case with some countries in South America, and it favors some countries that are net importers, for example, Central American countries. And this is reflected in the rates of exchange, the trade terms in the region. In general, they improved. However, in general, and without thinking about the differences that might exist on the basis of the exporting pattern that I was talking about just a few seconds ago, also these conditions of trade and therefore trade balances improved because the drop in the prices of exports was lower than the drop in the prices of imports. And so when one takes a look at trade on the side of imports as well as on exports, the result is positive, but with the implication of very different policies. And also, if you take a look with your eyes in the future, you see a high volatility and divergence in the price of exports from Latin America. We don't know very well, obviously, how these are going to evolve because they will include geopolitical factors, climate factors, obviously, random factors, the impact of the fiscal policies, destructions and disruptions in the supply chain that we're seeing, for example, hand in hand with the interruptions and the disruptions in international trade flows. And last year, we saw disruptions in the Suez Canal, in the Panama Canal. So all these issues that turn the price side dynamics, and therefore we faced with a high volatility situation and very high uncertainty. However, with this global scenario of slowdown of trade and great volatility, as I was saying previously, Latin America it stands out because of a performance that has been better than the global performance in Latin America. Exports by the first semester 2024, aggregate in goods grew 3.2%, while in the world they dropped half a point. But that, as I was anticipating, that leads to differentiated behaviors. Central America has not come out of the contraction phase that has been characteristic of that region since the first post-pandemic rebound in 2021. Mexico continues to grow, but at the same rate that it did last year. That is to say, it is on the path for expansion, which is relatively high, but stable. South America has grown significantly this year after having had a negative performance last year. And in the case of the Caribbean, because of a lack of data, we were not able to estimate the information, the aggregate data for the region. But in fact, when we take a look at the individual countries for which we have data, they are following all sorts of directions. In some cases, they're growing, particularly in the case of Guyana, because of oil, in spite of the fact that this year we've seen a drop in the rate of growth when compared to last year, and therefore there was a negative growth rate. And other countries, such as Central America, continue to face a contraction situation. So this is a positive scenario, highly volatile and very differentiated for the different countries in the region. However, if we take a look at the global service trade, as Pablo indicated in the introduction, this is a trade that continues to be very resilient. Obviously, it's been greatly affected during the pandemic because of the lockdown and the confinement, staying at home measures that led tourism to zero. This has changed with the reopening in 2021, and that is valid for the entire world. But the most significant data or the most important pieces of information are two. The first one is that if you compare this with the previous figure, the growth rate, where we see a stabilization of trade of services at a global level, is higher than the one that we see in the goods trade. We see 9.6% last year, 7.1% during the first quarter in 2024, this year, for service trade. And the other piece of information that is important is that exports from Latin America, also in services, had a better performance than the global average, 12.2% in 2023 and 9.5% during the first quarter in 2024. So the better performance of the region is not only reflected in goods, but also in services. Now, if we open up the exports, aggregate exports, and if we take a look at what are the items that account for this performance, then on the one hand, obviously, as we anticipated, the travel item continues to push significantly the recovery in the region. And this year, in fact, it's been completed. At least this has been overcome in the case of tourism. We've surpassed the levels of the pre-pandemic of 2019. So the columns on the left show the impact, the significant impact that travel had on service exports in the region. But it seemed to us, and this is part of what we decided in the team, and that's why we decided to focus a report on services, knowledge-based services. It seems to us that this is information that should not be neglected. Obviously, for example, and on the right-hand side, you see the contribution of the different items of knowledge-based services that have been identified on this figure, and these are relatively high, obviously, and clearly we see a slowdown because we are now completing this cycle or this post-pandemic rebound, but they're still very high. And when one accumulates the data of other business services, personal, cultural, recreational services, telecommunications, IT, charges for intellectual property, all of it that makes up knowledge-based services, in fact, the contribution to growth is greater than transportation services that are greatly related and correlated to good services, good trade. Now, up to here, this is the analysis of the data, looking at the data observed. In the team, we have different models which enabled us to have a perspective reading of what is going to happen in the next few months. And we do this through two different types of models, summarized in two indicators. We have the LATLI, which is the lead index in the exports of goods exports from Latin America, which what is telling us is to what extent and we are following a trend that is going to be kept over time, or are we already seeing a change in trend? And this is reflected on the left-hand side with these points that show points of discontinuity that have been observed or anticipated, depending on whether they are in blue or in purple, according to what we see in the trend. And the thing you see is that this expansion curve in the data shown in green as of 2023 and 2024 still machine learning selects what better predicts the trend. And we still see that they're not telling us that there was a change trend. This means that in statistical terms, in fact, we cannot say that there is a probability having moved into an expansionary, sustained fit. This is what the first indicator tells us. This is a now to estimate to have the specific estimates of them when we don't have data observed in this case, September. And what this is telling us, what the low casting index is telling us, that in August, perhaps the value of exports in the region went back to a negative ground. And the same thing, even with less probability, because the range is broader. The same thing happens in September when we had the last run. So we not only cannot affirm that we moved into a sustained expansionary phase, but the estimates, the specific estimates tell us, and this is something that we see in some data observed in the month of July, that is in keeping with the estimates reported in this report. And we see already a return back to negative growth data. Now, there's a high level of uncertainty about these prospects, particularly this perspective and the way these prospects were estimated. On the one hand, global growth, the latest readings by the IMF and the World Bank has shown some of the forecast in GDP of some of our partners. Others, the U.S. has improved the development of monetary policies that obviously will have an impact on growth of our partners and therefore the foreign demand of our partners, and the impact of the stimulus program of China that no doubt is a massive, and it is going to give a push to growth in China. And by the way, let me tell you that this is going to be the lower one in the last 30 years. But we still do not know in what sectors this is going to have an impact, whether this will be in the construction sector or in infrastructure or in other sectors. And that is important because each sector has an intensity of imports from Latin America that are different depending on what is being imported: agricultural goods, more than minerals, or more than manufacturing goods, more than consumption goods, or intermediate goods. So on that, there's still some uncertainty. And obviously, the Middle East conflict that has a direct impact on the price of hydrocarbons and oil, and that this has a significant impact on exports from the region. But if we take a look at the indicators, at the high-frequency indicators, these, on the one hand, provide us a real information about the evolution of external demand, and on the other hand, the perceptions of trade operators, the new orders, export orders, what is known as BNIs, that is to say, perspective indices of the business community, and a whole battery of indicators that you see on this chart of little cubes that come into our models, our estimate models. And you can see that it comes up in gray. So we start seeing perspectives with this new PMI, not very positive perspectives in trade operators, because ultimately they move international trade in the region. And having said this, the other piece of information is that this year, obviously because of the way the economy has developed, the economies in the countries in the region. Intra-regional trade renews the operations. Intra-regional trade grew less because it halted the recovery. It continued to be in contraction, while extra-regional trade grew again, and therefore the intra-regional coefficient that has grown in the last few years, that is to say, intra-regional trade had been a vector for growth in exports in the region, but this year it has not had the push that it had last year. And obviously, after that in the report, there is a vast discussion on how this has taken place in different integration blocks and how trade has moved within each one of the regions and how the integration agendas in the region have evolved. We're not showing the detail here, but you can see it in the report, in the monitor. And then this completes the scenario of this juncture. Now, if we take a look ahead, and as we were saying in the introduction, not only Latin America stands out because of a better performance compared to the rest of the world, but we believe, or at least we're highlighting what we believe could be some significant elements in order to challenge this trend of lower growth imported from abroad that perhaps we will have in the next few years. And the exports of services, specifically exports of knowledge-based services, are part of the solution. This is a sector that has expanded, that has grown, and you see this on the slide, to very high rates in the world. Between 2013 and 2023, it has grown at an average of 7% a year, while the trade in goods, according to our concept of the new normal, it's done this at a level of 2.3%, and services, including knowledge-based services and other services, only 5%. So the participation in trade has increased, and that is not a data that has to do with a juncture, but it comes from structural transformations. And many scholars have written about this, and we summarized that literature in the report. We have three major vectors of this revolution of international trade. One, information technologies that makes some services tradable that were not in the past. Secondly, the transformation into service, which are two aspects of a coupling of services to production, and regulatory reform, both internally within the countries as well as in the international sphere through trade agreements, international trade agreements, or ad hoc trade agreements that lead us to a reduction in some of the barriers for the trading of those services. Now, in the rest of the slides that I still have, I want to show you the information, the data for Chapter 4 of the report. However, an issue that I believe is important and that should be kept in mind is that we are in a sector where statistical limitations are very serious. And this is an implication of a policy, and I will come back to this. The data provided by the community, the academic community, and the policy community, and what they have in order to support the private sector in this one. And the private sector in itself, in order to develop and design expansion policies, are quite limited. So what I'm about to show you is what we were able to read in these very limited data. And so the first thing is that the same trend that we see at a global level is something that we saw in Latin America. In the last 10 years, the value of knowledge-based services has grown significantly in Latin America, 4.7%, which is less in the annual average, less than 7%, which is a global level. However, it is greater than the 2.9%, which was the result that we had in the region in exports of goods or exports of total services at a level of 4.3%. Nowadays, the trade of services, knowledge-based services, represents slightly more than 4% of the total exports, which is a lower quota than what is represented by global trade, which is 11.5% of exports. And therefore, And this is what is shown by the curve in blue. The participation or the share by the region in this trade has been falling. So this means a performance, a positive performance, better than the rest of the trade for the region, but with room for growth when compared to global performance. Now, if we take a look inside the region, we take a look at these averages inside the region, we see a very heterogeneous situation between countries. The left-hand chart shows the scale of export of services between countries. And here we clearly see that South America, in terms of size, is the big leader in this item. And countries in the region can be classified into three major groups. One, the leader, Brazil, that represents almost 40% of the total, then followed by an intermediate group made up by Mexico, Costa Rica, and Argentina, with shares in exports from the region between 12 and 50%. And it is interesting to see here, and I go back to this point, that here it is not only an impact of size, because Mexico is a much bigger country than Argentina and much bigger than Costa Rica, and a third group with smaller shares, Colombia, Chile, and Uruguay. And in here, the discriminating factor is not the size of the economy in itself, but the performance and the success in developing this industry during the last decade. The rest of the region as a whole represents 10%. Now, what I was saying previously, this issue is extremely important the way I see it, taking the case of Costa Rica and Uruguay, two relatively small countries at the scale of the region. However, they've created a service industry that is very successful, and it has acquired a weight in the economy that is quite significant, 10.4, 10.5, respectively, between Costa Rica and Uruguay. Weight on exports, in some cases, that is huge. The case of Costa Rica, for example, 26.8%, but also in the case of Uruguay, which is a highly specialized country in agricultural exports, soybean and meat, or beef. And now they represent less than 20%. And in terms of the population, the exports of services, knowledge-based services in Uruguay represents $1,700 in Costa Rica, and in Uruguay, $750 per inhabitant. And you see that on the right-hand table where we compare the data with other countries in the region. There are some countries in the region where the level of exports per capita of knowledge-based services does not surpass $10, in some cases $2 or $3. So this is the message about the importance of this sector for the region. Now, if we take a look at the composition, the makeup by sector, we see that the region is very concentrated on what is called other business services. And in the document, we have a whole discussion about what sort of services these are, what are the major companies that export in the region for all services, and they concentrate more than 2/3 of exports of services in the region. And this is a quota that is greater than the global average in an item that at a global level is in contraction. On the other hand, telecommunications, IT, and information, we have a quota that is lower than the world average, and this is an item that at a global level is expanding. And the same thing is valid for other categories that have lower weights. You see that on the screen. You see the information on the screen. And when we take a look at this as composition by sector, and we compare this with other classifications that give us a level of sophistication, we see, and those that can be seen at a more granular level of the statistics that I'm showing here, the region is still concentrating or specializing, has specialized in the segments of sophistication that are mid to low. So there is a space, from what this tells us, to go up in the scale of quality and sophistication, of the exportable supply. And a question that is obviously in the concern of many is what could be the impact of artificial intelligence? And in here, we conducted an exercise that, although this is relatively simple and indicated because of the information that we have, it is still very original because, according to our understanding, this is something that has not been done in the region, and it is still leaving us a very clear message. This means that when we take a look by tasks, what are the tasks that make up these different items that are exported by the region in knowledge-based services, and we take this from some research, several research work that has been done in other extra-regional countries, but also within the region, on how this artificial intelligence could have an impact by substitution or by complementarity. All these tasks, we find that the average to date, 46% of knowledge-based service exports have a potential and will be replaced by artificial intelligence.
And 52% in a scenario to 10 years. So what does this mean? It means in what degree, for example, if I export services, for example, call center that are very simple, in what degree can this be replaced by artificial intelligence? Or if I'm exporting services, customer services, very circumstantial, very focused on where the judgment and criteria, human criteria is more relevant. This is just to give you an example of what I mean. Now, however, what is interesting, and to think when we read these statistics, is that we know from research by other international organizations or research centers, for example, in this case, the IMF, the substitution and complementary services are differentiated not only at a level of tasks, but also at a level of responsibilities within those tasks. So in other words, it's something that we have to look at with a magnifying glass. And the other exercise that we do is to see what type of policy is required to promote these exports. So we see some variables that have to do with the internal productivity of the exports sector of service-based, of knowledge-based services that have to do with connectivity or indicators, credit indicators that are done by the companies. And I'm not going to detail that here, but in their report, we discuss how those indicators have evolved in Latin America during the last 10 years and how we compare this in regards to the big players in the international field. And you see it here very clearly in this graph. These are all indicators that are significantly associated to the performance of exports. So that gives us an indication of what the internal policies should be for the development of productivity to expand this sector. Obviously, and it's the important message of this report, that internal productivity and external competitiveness have to go hand in hand. So we also look at what the costs of access to markets are, both in terms of, let's say, in terms of trade barriers, which are what are normally negotiated in free trade agreements, in trade agreements, as well as the impact of double taxing agreements, those that are normally negotiated separately from the trade agreements and that have a very important correlation with the performance of exports. And in that case, in Latin America, we have a very advanced agenda and trade agreements, although in some cases, these are already trade agreements that have aged and that have not been updated at the pace of the changes, the shifts in the industry that is very dynamic. However, we do have some agreements with countries that are members of the agreements that are definitely leading. For example, as is the case of digital trade agreements, which is a very important division for service exports. And in the case of double tax agreements that are very important. We're relatively lagging behind, especially in agreements among the countries of the region. Then what we did, to give a dimension of what those obstacles are of market access, we see what the available database tells us on these measures on regulatory access barriers, market access barriers, based on general knowledge, as well as those specific obstacles that make digital trade, as well as I mentioned a moment ago, the obstacles that still have an impact on intra-regional trade. Obviously, I'm not going to go into the discussion of these data, but the report describes it, reports it, and comments on it abundantly. When we put all of this in an econometric exercise, it gives us a probability and the relative weight that each one of these variables has an impact. Two messages come up. I'm not going to delve into the results either here, but because they're all important. So there I want to highlight an important, it's that at least in these variables, this is important to interpret the coefficient that has an impact on the general exports of knowledge-based services in a country. Others, such as trade agreements and double tax agreements, because they're bilateral measures, they have an impact on bilateral flows. So the coefficients are not strictly comparable, but they're all highly significant, except for the financing variable, which already says a lot about the capacity that we have to measure those factors that make the financing variable that are relevant for the companies that export services and that are very different from the other companies. They have little fixed capital. The capital that they have is intangible, so they have little collateral. So they are companies that don't really adjust to the criteria of granting of credits in the financial systems of our country. So what are the conclusions that we can draw or that we drew from the report? Therefore, first, that the long-term trend to which the region seems to have gone back is a challenging one. It's a trend aligned to, as Pablo said, to the principle that what we call the new normal after the pandemic. But maybe it's a description, or a better description today would be the new old normal. So it's the old normal of yesterday, but with high uncertainty moving forward. The second thing is that the prices that have been promoted traditionally, or a great deal of the value of exports of goods in the region, are highly volatile, and they follow this trend of high volatility. And so it's also important to highlight that we're still at historically very high levels of those prices. So this leads us to conclude that the price channel will probably not be, we can expect great promotion from this pricing channel. Look at the real exporting channel in the region. We have substantial is towards in a downward trend due to factors based on which we actually don't know what is going to happen and in what has to do with the readjustment of geopolitical situations, industrial policies, the pathway towards a greater protectionism and the macroeconomic evolution of our trade partners in and out of the region. However, what we do see, and it's the message of optimism that we've concluded the analysis of this report with, is that there is significant potential in services. Clearly, it's a relatively small sector, so it's not what is going to replace trade in goods, but it has gained importance, it has grown, and it has shown significant resilience during times of crisis. So we believe that it is truly a sector in which it is important to invest. So we have a discussion on what the implications are for this sector. First, as I mentioned a moment ago, it's important to have a strategic vision that considers the service sector of the countries in the world context. So in other words, a strategic vision that is systematically associates internal productivity and external competitiveness. And for this, to design effective policies based on evidence, we need a sound base of knowledge. We still have very little information on how these services move, what the services are, which ones are the most successful ones, which are the most successful companies in this space, to have better designed public policies, better monitored, better evaluated. And this is a fundamental requirement for this. Third, with the private sector, it is important to work with the private sector to articulate the design of the public policy. It is a sector that moves at the speed of light. It's a sector that moves at the speed of technological changes. It's a sector that moves with companies that in some cases are very large and in other cases very small and very successful companies. So it's important to work hand in hand with the private sector. And there, the promotion and investment agencies are key because they allow the public sector to solve incomplete and asymmetrical information. And even with the research, the study that we did in this bank and in this sector, they tell us that they are very important for the performance of the companies, but also because they are the ones that are more in contact with the companies, so they could give signs to the public regulator on where the shoe doesn't fit, where it's too tight, where the areas of intervention that should be a priority are. To invest in human capital, this is fundamental. And there in their report, we discussed this abundantly. And the lagging in the region is occurring at several levels, and where these focuses of intervention and the temporary horizons of efficacy of those interventions are very unequal. So we have to expand access to digital infrastructure. This is evidently essential for this. There are physical aspects, there are regulatory aspects, and there are things that have to do with access and accessibility to broadband. And fixed broadband is important. That is what the econometric exercise has revealed, which is key for the region. To develop specific credit instruments, I mentioned this when I talked about these variables. It is important to think about the credit sector to these companies. It is a matter, and it's important to think about going beyond the credit sector with seed capital, venture capital, private capital. And these things have not been very developed in the region yet, but this is what is behind the success of these industries in the past. And thinking about all of this, we have to advance in public policies that facilitate the development, the growth, and the internalization of the companies in that space. And finally, to support all these interventions of internal character that make productivity of the economy and of the sector that supplement it with a view towards the global market, competitiveness. So in other words, we can be the most productive in the world, but if we don't have access to markets, we're never going to turn that productivity into competitiveness. So it's important to look at that. So we have to look at both sides. And on the external side, on the side of international negotiations, it's important to think about the multilateral level, what is happening in the WTO, and to think about what can be done at a bilateral level. And well, some countries have advanced very, very fast, very quickly. Others are lagging behind, but we have to think in pragmatic terms. Some countries, for example, in the telecommunication sector is a sector in itself. It's a sector where the agreements are sometimes sectoral agreements that are not necessarily negotiated in free trade agreements. Or, for example, the double taxing, which, as I said, is something that is negotiated in sectoral agreements. So we have to think in very pragmatic terms about what the bottlenecks are for the private sector and try to solve problems with a very pragmatic approximation. That is the general message of the report. The report should already be on air with this QR code. You can access it through this QR code, and the data behind the report are going to be included in our information system on the trade of the region. And there you also have the QR code to access it. So, well, those are the main messages. And now let's see how we can discuss these things. Okay, thank you very much, Paolo. Thank you for the presentation. I think that it's been a very, very thorough. And as Paolo said at the end, the general message is that the region is facing a challenging context with a very high level of volatility, uncertainties as to the future, and with a trade situation that has been the best in comparison to the average of the world, but still it shows a relatively slow growth trend. So the idea is now to open the floor to the discussion, and I'd say that we can start the discussion in two blocks. First, to discuss the general report, and then to go more to the specific part on services, which is the main focus of the report. So once again, I invite you to send your questions. I see that there are already several questions that have been posted in the chat. So we're going to interact, as we said before, with Paolo, Katia, Romina, and Rosario. So just to start the discussion, I would start with you, Rosario, and I'll ask you to go into more detail of what has to do with the evolution of trade flows in nominal terms and in real terms. Last year, when we talked about the monitor, we saw that 2013 had been a relatively atypical year because we saw a decline in the volume of local trade and an increase in the volatility and the activity. So why has this happened and what has changed in regards to that situation, 2013, 2023, 2024, in terms of prices and trade volume? We saw this peculiarity of this decline in trade activity. Economists looked at it with elasticity, and elasticity in trade is positive when there's a decline in trade. The GDP goes down, and it was atypical in this volume when there was an increase in the GDP. And with previous crises, such as in 2009 or 2020 with COVID, both years were of a decline in trade as well as the GDP. In 2023, this didn't happen, and we have to look at the explanation in terms of the post-pandemic recovery. In 2023, what happened is that well, since 2022, we had been recovering after COVID and trade with lagging demand of industrial products that went up to half of 2022. And then this regularized and was with this decline in trade because of all the factors that Paolo explained, trade tensions, geopolitical conditions, contractive monetary policies, and that determined this atypical drop, which is also a drop in the value in trade, which is very important to 5%. And obviously, this came accompanied by a very strong fall in prices in 2023, and this was linked to or connected to the majority of the products of the commodities and energy, which is the one that had a more significant decline in 2023, and also agricultural products. So also the invasion of Russia on Ukraine. So 2023, we saw that interannual drop. In 2024, what changed is that, well, we see not only the recovery of the trade volume, but also that the GDP is increasing, and it determined this incipient recovery of the traded amounts. However, the prices are still in a stabilization phase, and obviously these drops were a lot smaller in the products that saw this decline, and the index of general products from raw materials, it only saw a decline of 1.1 in the first part of 2024 when it had dropped almost 25% in 2023. So it's a much lower drop in prices and a recovery, as we said, of the traded amounts. So mainly the difference is that we see the expected behavior, which is more normal in 2024, with a positive elasticity between trade and the global
Una
GDP.
pregunta un poco de seguimiento a
A
esto y
follow-up
viendo lo que
question to
señalaba
this,
Paolo
and
sobre
looking at what
el
Paolo
comportamiento
presented
diferencial que hay
on the
entre comercio intrarregional y
uneven
comercio
behavior
extrarregional.
that we've seen in
Claramente el
this
dinamismo se ve más
intra-regional,
por el
extra-regional
lado extrarregional y
behavior.
quería ver
And
cómo
there I
estabas viendo
wanted to
la
see
demanda
how
internacional,
you
¿no? O
see
sea,
the
¿qué,
international
qué
demand.
fue
What
la demanda
was
internacional lo que hizo que traccionara más el
or
crecimiento
what
y particularmente
led to this
en
greater
términos
traction
regionales, ¿desde
and
dónde
growth
están empujando ese
in
crecimiento?
regards to the
Bueno,
traditional
en América
patterns? Where's
Latina
this
tenemos
growth
que la
coming
demanda
from?
está
Well, in
dando
Latin
lugar
America, we
a
know
que
that the
tenemos
extra-regional
una
demand is
participación
what has
regional
greater
y eso es lo que
participation in the
determina al
overall,
final los flujos
and that's what in
totales
general determines
al
the total
interior
flows.
digamos, de
Within
cada bloque es diferente,
each block, it's
pero sabemos
different.
que
But
lo
we
que pasó
know
en 2023
that,
fue que
well,
Estados
what
Unidos
happened
y
in
China fueron
2023 is that the United States and China were the
más
main
externos. En cambio, la
promoters
Unión
of this
Europea
external demand.
tuvo un
However,
saldo
the
negativo
European
en todas
Union
las
had a negative
regiones que
contribution in all the
habíamos visto.
subregions of Latin
Lo
America.
lo que sabemos en
What
términos
we know
de
in
comercio
terms
interregional es
of
que el coeficiente para toda la
interregional
región
trade is that the
está en
coefficient for
promedio
the
de
entire region is on average
0,14%.
at around
Las
14%.
exteriores solo
So the
representan el
interregional
14% en total. Y ahí
exports
Paulo
represent
mostraba
14%
que
of the
se siguen
total, and their
cayendo
Paolo
en el
showed that they
2024.
continued
En cambio, ya
to fall in
en el
2024.
2024
Uh,
ya se empezó a
in
recuperar
in
la demanda
2024, we
internacional
started to see
y
a
ahí se
recovery,
vio
and
este mejor desempeño de Estados Unidos
there
y China
this
traccionando
better from the United
y se
States and
sumaron
China continue
las
with
exportaciones
the more
medidas que
traditional
se implementaron extrarregional.
the extra-regional
Cuando decimos igual,
demand,
el
and
término
when we
el
say
comercio interregional no es igual obviamente
equal,
para todos los bloques.
interregional
Una cosa
is
es
obviously not the
Centroamérica,
same
donde
for all the blocks. One thing
Mercosur
is Central America,
tiene
where the
importancia,
interregional
Mercosur también,
flows
y
are very
el caso
important, and in Mercosur as well.
de la Alianza del
And
Pacífico,
in the
donde
case of the
México
Pacific
es uno de los
Alliance,
principales
Mexico,
socios expo a Estados
where
Unidos,
Mexico
el comercio
sends
internacional
its main
tiene
exports to the
rol
United
menor.
States,
De todos
foreign
modos,
trade has
el
an important
desempeño
role.
fue
However, the
peculiar
performance
en
was
el Mercosur.
peculiar. For example, in
Sabemos
Mercosur,
que los flujos
we know that the
del trigo de
flows
soja, lo que
for
ocurre es
soy,
que cuando tienes
being
una sequía, como
Argentina,
ocurrió en
when it has a
2023, tiene que
drought, as
importar
occurred in
ese
2023, it
soja
has to import
para procesar,
the
porque tiene una
soybean to
capacidad
process
muy
it
amplia y
because it has a
eso
very
lo
broad
importa,
scaled capacity. It
eso impulsó
imports
el comercio
it from its
internacional en
partners from
2023.
Mercosur. This
Ya en
promoted
2024
the
vemos
trade in
una
the zone.
normalización de
And then in 24,
producción
this
de soja en
the
Argentina,
production of
eso se
soy
revirtió
in
y ya no hay
Argentina
comercio
was not.
en el Mercosur
So the
en
interzone
2024. En el
trade
capítulo 3
in
tenemos
Mercosur
un gran desarrollo de
saw a
todas
decline. And we
estas
have this development,
de
these differences
comercio extra e
among
intrarregional.
extra and intra-regional
Muchas gracias,
trade.
Rosario.
Okay, thank you very
Yendo un
much.
poco al tema de las
Rosario,
tendencias y las
going a
perspectivas tanto a
bit
nivel global
to
como
the
regional,
trends and the
quería consultarte,
perspectives at a
Katia,
global and
vos
regional
que
level, I
digamos,
wanted
te
to
haces
ask you,
no
Katia,
de dicotomía, pero
on this type of
sí
dichotomy, but well,
desalineamiento
maybe
respecto a lo que
this
se está
disalignment
previendo en términos
in
generales para
regards
el
to what
comercio
is
global,
being
donde la
seen in
mayoría de
general
los
terms for
organismos
global
internacionales
trade,
están
where the
viendo
majority of
un
the
cambio
international
de tendencia, una
organizations
recuperación fuerte del
are
comercio
foreseeing
global, pero en los
a
números que
change in
ustedes plantearon
trend
y en los
and
indicadores
trends
que
with
miden esto que
stronger
mencionaba
trade,
Paolo, ese
and
cambio de
and
tendencia todavía no se
the
refleja claramente, ¿no?
this
Entonces quería
change
ver
in
un
trend is
poco
still
cómo
not clearly
interpretaban ese
reflected. So I
ustedes
wanted
y
to
en
see
particular qué
how
se puede
you
esperar para
understand
el
this, and in
corto plazo,
particular
¿no?
what we
En lo
can
que resta del
expect for
año
a short
y
term,
principio del año
for
próximo en
for the
términos
remainder of the year
de
and next year
perspectivas del comercio.
in
Muchas
terms
gracias,
of
Rosario.
trade, regional trade perspectives,
Bien, bueno,
particularly.
gracias, Pablo. Sí, en
Thank
el
you,
informe
Pablo.
hacemos
Yes,
dos
in the
visiones,
report,
digamos, de las
we
perspectivas para
have two visions, a global level and a regional level. Regional with our own indicators, as Paolo mentioned, but at a global level, beyond the fact that we do expect this recovery, and even the WTO considers an increase of trade for 2024 in terms of volume, the data is of 2.7, and for 2025, 3% increase in volume is expected. The reality is that in terms of values, the data for 2024 is of stagnation. And this is because this drop in prices that Paolo mentioned and that Rosario just mentioned again. This reduction in prices is what offsets the increase in the global trade volumes, and we will be seeing a stagnation of the trade values this year. But beyond that, what we have to bear in mind are the indicators that are being seen and that somehow advance the evolution of trade during this second semester. And there, what we detect is that there are several indicators that are showing us a certain fragility in their recovery. On one hand, the main or the most relevant, or that we observe as an advancer of this evolution, is this sub-index of export volumes. It's a PMI, the purchase manager of the manufacturing sector, and that index, the reality is that it was only above its critical value this year during the second quarter at a global level. And even when we look within and we look at the main economies of the world, that global result is the result of an asynchrony in this sub-indicator in economies such as the United States, China, or Korea, and that also had a high volatility. So, and as of June or July, that indicator is even below the critical level. So that forecaster indicates that the evolution of world trade saw a deterioration as of the second semester, and this we see at a global level. And also, as Paolo said, at a regional level, we have our own indicators to try to forecast the evolution of the exports for the coming months. And this is done through two indicators, which are the ones that were shown. On one hand, Ledley, which is the index of the exports value, and it allows us to detect if there is a change in the trend. We come from a deceleration trend of exports, and we want to know if that trend will change. Well, the reality is that the indicator is not detecting a shift in the trend. So from now to March 2025, what we're seeing is that the exports would not be on a pathway of sustained expansion. So this data that we saw in the first semester will continue to deteriorate in what will continue in the year and during the first months of next year. And it also confirms that, aside from confirming that there won't be a shift in trend through an indicator, in a nowcasting model, we try to determine the variation rate of exports for the months for which we do not have data. And we do that using these indicators, for example, not only prices, but production, automobile production, BMIs that are detailed in the report. And this nowcasting, what it tells us is that in August and September, the interannual rate of variation of imports was between 0 and 3% maximum. So the average would be below what we saw in the first semester. But there are also some variants of the model that even showed us negative rates for these months. So they confirm this fragility in the recovery that we saw in the first semester. And therefore, we expect that in the year for Latin America will be positive, only slightly positive. And the second semester will have an evolution that is relatively worse than the, as we've said, due to an evolution in prices, but also there are other real export indicators that indicate the fragility, among those, the production of automobiles. So with this, what we want to know is how the year is going to close. And as I've said, we estimate a rate that will be lower than what we saw for the first semester.
Thank you. And I'd like to delve into what the averages represent. When we take a look at the average in the region, we see a certain dynamic behavior, which is greater than the global, but lower than what we have. But with the and take a look at the data, regular data, this to see whether you could give us some detail about intra-regional behavior with countries. That is to say, what other have pushed the average, and if there are any countries that stand out more than others. Yes, in 2023, the drop in Latin America was lower than the global, and in 2024, the recovery is greater than the global. And this is due to some similar situations. And what drew our attention was the good performance of Mexico and Brazil in the course of this year, which had been highlighted in the monitor last year. And we see a performance in the amounts exported by Mexico and by Brazil. That is to say, they do separate from the rest of the sub-regions of the countries that have been declining since 2023. And Mexico, obviously, what it pushes Mexico is exports to the U.S. in key sectors, such as the automotive sector. And what happens there is that Mexico is being consolidated as the main origin of U.S. exports, surpassing other partners. And in the case of Brazil, we also see an outstanding increase in the amounts exported in 2023 of sectors such as the agricultural sector on the one hand, and the mineral ore and oil on the other one. And in the report, we have a good image of what is happening with the agribusiness in Brazil and how it's increasing its productivity and its share of the product. And we see that the increase in productivity and the investments in the last 20 years in Brazil allowed it to have this productive leap in exports and has turned Brazil into the main exporter of key agricultural products such as soybean, coffee, corn, and sugar. In 2024, we see a repetition of this situation with Brazil and Mexico with a good performance. And as Paolo was saying, we also bring in the South American countries because of a relative improvement in prices, as well as due to an impact of volume in countries that are specialized in agricultural products, such as Argentina and Uruguay, that had been impacted because of the trend in 2023, impacting crops and production. In 2023, this was surpassed, and we have a significant recovery of the exports from South America. In the case of Central America, we see that there is a drop in both periods. Costa Rica stands out with a positive development because of medical supplies that were sent to the U.S. And in the case of the Caribbean, we also see huge heterogeneity, and Guyana stands out always because of oil. But as always, the region shows huge regional differences and also between countries. And these years, we saw clearly how Mexico and Brazil stood out when compared to the rest of the countries. Very well, thank you, Rosario. And now to serve specifically knowledge-based services that, as Paolo showed, they have a high potential and they're quite unique in the monitor this year. And I wanted to ask you, Romina, because you've been working on these issues for many years, so it is a great promoter of the sector. So, Romina, I wanted to start with a relatively general question. So what we see is that the region shows very dynamic behavior in the trade and services, particularly knowledge-based services. However, this dynamic behavior has not been reflected in an increase in participation or in the share of the region in global trade. We grew a lot, but not so much as the world is growing. And we tend to see this as a good opportunity to be able to push the sector. And I wanted to ask you in general term, what can be done and what ought to be done in the region in order to change this situation, a situation that is positive, but we wanted it to be even more positive in order to gain a market share. Well, thank you very much for the question. Paolo was explaining a bit what had to be done in terms of policies, but I'd like to delve deeper into some points. We can consider the successful experiences, and when we see what has been done in Latin America as well as in the rest of the countries, and the countries that performed well on this, we see some common traits. First of all, the long-term vision, reviewing policies, on how to grow both in size as well as in sophistication in the long term, and also the multidimensional aspect of it. It is not sufficient to give an incentive in terms of taxes, but we need to take into account policies that will involve all these axes. And this was mentioned by Paolo, additional details aspects. And as he mentioned, the coordination between the public sector, the private sector, and academia, which are essential. On this, for example, the institutional quality plays an essential role because we're dealing of institutions, that is to say, promotion agencies, exports, as well as attracting investments. They play a very important role. Improvement in internal or domestic regulation, and also issues related to the availability of information. As Paolo said, there's serious problems in statistical availability, and this is a problem not only in Latin America, it is generalized, but we need to have a more and better information for decision making. And these sectors are human capital intensive, and therefore the availability of human resources is essential. And in here we have some problems, particularly thinking of the long term as a region. It is important to work on the amount as well as on the quality and the cost of human resources. For example, as Paolo mentioned, we have to strengthen the STEMs, the languages and soft skills which are essential, and to promote greater efficiency in labor markets in order to be able to bring down labor cost, non-wage cost. We don't want to compete because of low wages, but not to have unnecessary rigidity. And then productivity. In Latin America, we have a significant gap in connectivity. So talking about connectivity with the developed countries, not only in coverage, but in quality. Less people have access to the internet than in worse conditions. So we have to improve that, and also to improve the regulatory framework. And this is essential because most of the services exported by the region is done through the internet. Also, issues related to funding. Paulo mentioned the issues related to the development of specific financing instruments. And I would like to add that we have to raise awareness in traditional financial institutions on the operation of these markets, the characteristics of these companies, and for you to understand the business models and provide better financing. And last but not least, on the issues of international agreements, I believe that it is essential, particularly in the intra-regional sphere, to strengthen agreements that already exist, for example, through the modernization of the older agreements, or sign agreements on the missing links, where we're missing agreements between countries in the region, and also to supplement this, if this has to do with the services sectors, but it is essential to have double taxation avoidance, for example, audiovisual production for that sector, or mutual recognition, professional services, or other services. There's a lot to be done. We have interesting initiatives in the region, and I believe that it is along that path. Thank you. Thank you, Romina. And one of the questions that is asked from Argentina, and this has to do to whether we've been able to identify or not the origin of these exports, origin not only in terms of countries, but origin in terms of whether we have different services that are produced and exported from special economic areas, or special territories, customs territories. And knowing your response in advance, I wanted to add something else to the question. I wanted to add the data situation. Paolo brought this up in the presentation. The unique situation that we face in terms of access to information in the service sector, how important it is, and to see the way you see this situation, because we know that you've been working a lot on this. Well, thank you for the question, says Romina. Although there are countries that have duty-free areas, and it's important to export services, the main difficulty to identify, to see whether services come or not from these duty-free areas, is because we don't know where they're headed and where they come from. In terms of with statistics, there different customs, whether the good leaves a country, and that is recorded. So we don't have a custom in fiber optics to see what comes in and what so there's not tab, they're the wrong way. Just imagine if we don't have accurate information about the country and the destination of the services at that level, well, much less as to where in the country this comes from, in the general territory, or whether this is in a specific customs-free area or duty-free area. We have problems with the coverage as well. There's very little sector disaggregation. There's very little disaggregation by countries, and not all countries have the same coverage. And even in the same over time, we want to conduct an analysis to see what happened or to compare this between different countries. We encounter difficulties, and many times that when they record the same, we see inconsistencies. I'm saying that this is not a problem unique to Latin America. It is a problem that we see all over the world. But in countries, in developed countries such as those in the region, the difficulties stand out. We don't have data on companies or signature, or there's some experimental basis by some international organizations, but these bases also have limitations and difficulties. So it is within this context that we have serious difficulties by the companies when we come to basic things such as identifying a market with potential, making a decision on trade or investment, and also by those responsible for public policies to be able to diagnose, to be able to develop a policy, and then to monitor to see what the impacts are. So this is a field in which we have to work a lot and to see the protagonic role that is placed by knowledge-based services. Thank you, Romina. And delving into the issue of the determinants of competitiveness in the sector and the model that was being proposed and described by Paolo, the empirical analysis shows that there's a different analysis between intensive sectors and imports. And I wanted to ask you, Katia, what you get from the model in the light of what Romina was saying at the beginning. What are the policies that one should implement, and where should we focus in order to give a push to the sector? Yes, what we did was to try to assign numbers to what Paolo was stressed and what Romina said, each one of these determinants. If a priority can be given to them because we don't have the resources to release all of them, which ones have to be prioritized, what has a greater weight as a determinant of knowledge-based services and their exports. So we used various panels for a coverage of almost 80 countries in the world for 2012 to 2022. And we selected on the basis of what we already have with the biography of some connectivity, fixed connections to internet or subscriptions to internet, access to a computer, to a laptop in terms of human capital, capitalization of human capital. We selected some indicators such as, for example, what share of the population has completed secondary studies, or what share of the population has or speaks English, or at what level do they speak English. Also, in terms of institutional quality, we use a governance indicator considering the relevance of this point, as was mentioned by Romina now. And in terms of the regulatory framework, we also included trade agreements that have provisions on services, and also the double taxation agreement. So using a model of fixed impact or fixed effect, we wanted to estimate the coefficient. What happens if we improve each one of these variables that I mentioned? What would be the impact of these on exports of knowledge-based services? And what we found was that the two most relevant dimensions are institutional quality and human capital. And within human capital, we see the way they manage English that stands out. These are the two most relevant determinants compared to the rest. It doesn't imply that all the rest, that they were all significant. And as Paolo showed in the images, they showed a positive relation. If some indicators improve, that would have a positive impact on the knowledge-based service exports, but it is quite relevant to try to measure and to see the results. We know that the improvement in training, for example, being able to have training equivalent to completing secondary school and to have adequate management of English. English have a positive impact on knowledge-based service. And these indicators on governance will show in general terms the capacity of the government to be able to enforce or to monitor policies. That this also has a positive impact on the capacity of a country to export these.
The coefficient of the regulatory environment and trade agreements in matters of services with double taxation, they have lower coefficients, but well, as Paolo said, we have to read this with care because in the end, this determines a bilateral relation and not really the performance of the global exports. And connectivity, this matter of having internet as well as a computer, a laptop. These were also that also gave positive results with a slightly lower coefficients, but it's important to highlight that we try to measure the access to broadband result in this just it has on the exporting capacity that I want to readdress is we also tested financing model didn't give significant results in this sense either, and we infer that this has to do with the fact that with the financing tools that we currently have or that are measured are not the ones that reach the exporters or potential exporters of this type of service. We need credit, much more specific credit and financing tools for this sector for all the reasons that Paolo already mentioned. The model specifications in the model, will we invite you to look at them? We believe that they are very relevant to be able to put a number on this and to measure each one of the determining factors that were mentioned. Thank you, Katia. We're reaching the end of our session, and I wanted to go back to Paolo with policies, but before that, I see that there are many questions on the topic of the trending topic, which is artificial intelligence. And how do you see this in the service sector, and what can we expect at a medium term? Well, as Paolo said before, an important proportion of exports of services based on knowledge of Latin America and the Caribbean are exposed to artificial intelligence. And I want to say that exposed doesn't mean that we're all going to lose our jobs and we're going to be replaced by artificial intelligence. But these are jobs, these are tasks that are going to be impacted by artificial intelligence. So in some cases, as Paulo mentioned, call centers, for example, there's not going to be a substitution, a replacement, at least not a significant one. But in many cases, jobs that are susceptible to be positively impacted by artificial intelligence. So where we can become more productive with the use of artificial intelligence. That poses an enormous challenge in terms of capacities. On one hand, the abilities, the skills of the jobs are not going to be the same as the ones that are going to be created. And then on the other hand, the jobs where there is potential to benefit, there we also require the development of new skills. So going back to everything that was mentioned before by everyone on the importance of human capital. So here it's fundamental for educational, public, private institutions to have a more comprehensive vision of public policies and to work on the development of these skills that will allow us to use artificial intelligence in a supplementary way and to even improve or scale both in size and sophistication these services based on knowledge. Thank you, Rubina. And going back to Paolo for a more general analysis. And thinking in perspective terms. the message is that we are growing with a stagnated trend or at low levels. So the question is, what kind of policies should we implement, not only in the service sector, but in general terms, to make sure that the trend will continue to be positive, and especially so that that trend, so that we can challenge the trend, we can buckle it, and with a higher growth, end up on a higher growth path? Well, it's a difficult question, but I would say three things. The first is to not lose sight of the role of trade for general economic growth. We know through the research here in our sector that trade, if we look at the past decades, trade has had an enormous impact on the economic growth of the region. So it's important to focus public policies towards growth trade, towards trade growth. And we need short-term policies, we need continuity, we need to look beyond the current juncture. So that's a bit what we try to do in those reports, where we always look at the juncture, but we also propose matters that go beyond this. Second, I know that your question is not necessarily focused specifically on services, but I think that in the case of services, it's emblematic. The fact that we're navigating blindly in the case of services, it's dangerous, it's difficult, and it's difficult for two reasons. One, because we lose the opportunity of identifying spaces for possible growth and where the public policies should focus. In the case of services, it is clear. The other, because we don't have the capacity as well, the policy developers don't have the capacity to say, okay, this has an impact, this doesn't. And in this context, where public resources to bet on a growth path or another are limited, and that's important. In the case of services, it's fundamental, but in the case, for example, it's a matter of life or death. In the case of trade in general, I also think that we need a new generation of analysis and of knowledge that will clarify how the world is changing. It is clear that the world after the pandemic is changing at an important speed, at an important pace. So I think that how to associate knowledge with with the development of policies is fundamental. And third, stopping at the we're very the utilization. There are forces that we're seeing, but that came from even before. We've documented it in the report in the case of services, but we documented it in previous reports and in the case of goods. We're on a pathway towards structural changes that comes from the time of the financial crisis with a shift in paradigms. And this shift in paradigm is that before the international financial crisis, trade, and Rosario said it when she mentioned in economic terms the elasticity. It used to be higher and very atypical. Now, this year it's been negative, but it's an atypical year. Now it's below the unit. So to have the same amount of trade for an equivalent amount of or size of growth of our partners, it's harder. And so how can we position ourselves in this changing world? I think that that's the question, and it has to do with several things that have been mentioned here. One, once again, to think that especially in small economies such as Latin American economies, productivity and competitiveness are two faces of the same coin. Second, to not only think about prices or to not think only about values, but to think about values or amounts and prices. And third, to delving into the wonderful work that we did a few years ago on the quality of the exportable, the sophistication of the exportable, because the greater quality or greater sophistication, the effects, the spillover effects of a dollar of export are higher within the economies. And that is what, those are the topics that we believe are important for the future, important for public policies, and important for our agenda moving forward. Okay, thank you very much, Paolo. We've reached now the end of the time that we had assigned for this meeting, and I think that Paolo summarized it wonderfully at the end. Somehow the region is now with this new trend post-pandemic and the things that we can do so that this trend could be as positive as possible. And it's anything that we do is going to be more than welcomed. And I think that the monitor is a report that tries to help for that, to inform and to shape the discussion of these public policies for foreign trade and integration. So I reiterate that the monitor is available on the bank's website. There you have the links in the chat to be able to access them, and I invite you to download it and to comment. It is impossible in an hour and a half to be able to present all the information that has been developed during a whole year of work, but it's all available there. And I also invite you to go into Integra, which is the database that we've tried to develop the friendliest way possible so that you can easily access the data in a very visual way. And also those of you that are dedicated more to research can access the data in a more disaggregated way and work on them. So with no further, Paulo, Caterina, Rosario, thank you very much for your work and for the presentation. And we thank you very much for having joined us in this presentation.
Gracias.
Thank you.